Hey everybody, welcome back to another episode of Dental Momentum. Jared Duckett back at you with another video to help you get better. And guys, today we're talking about all about these financial statements, right? Kind of last week, last video, we kind of looked at sample financial statements and kind of what they look like, categorization, all that fun stuff. What we're going to start going over is what our team, I guess, recommends looking at financial statements. Not going to say this is the absolute I think this is the absolute best way, but other people might think differently. But what I think the number one thing to look at right when you get your financial statements, okay? Two things. First thing, look at the cash in the bank. Second of all, look at the cash flow for the month, okay? Cash in the bank comes right off that balance sheet. Okay, maybe you have a couple different accounts. Maybe you have that operating account and have some money set aside for taxes. Look and see what those balances are. Second thing is look at the cash flow on the cash flow statement. Did you increase? Did you decrease? If so, whichever way, by how much? Okay. Today we're going to specifically talk on the first topic. First thing you look at, balance sheet, cash in the bank. Okay. And the question is, how do I know if it's good or bad? Okay. What we recommend, how much cash to keep in the operating account. Okay. Because there's two different accounts here typically that we recommend. Operating account, which is where all your deposits come in, all your expenses go out, all your overhead goes out, payroll, all that fun stuff, okay? And we typically recommend a tax account on the side to account for any taxes from all the profit you're making through the year, right? So in the operating account, we recommend keeping 3 months, give or take, of BAM, of overhead, okay? BAM is the bare ass minimum, okay? Which is typically on a standard month, what's the amount that's going out, okay? Payroll, all the 6, think about the 6 categories of overhead. Also, don't forget the 7th, because if you don't include that 7th and things get tight, right? Think about back in COVID, things got tight. If you only have the 6 in there, then you're the 7th, the doctor. So maybe you don't have enough cash to pay yourself during a rough time. Okay. So think about on a standard month, what's going out the door. Okay, if you've got typically, you use a $1.2 million practice, so you got 100K of collections coming in a month, you're running, easy math here, 50% overhead. So you got 50K going out for those 6 expenditures. Add on what you're taking out as a doctor, that's the amount for the month. Maybe it's 70,000 in that equation I just did. 50K plus 20 for you, rough math. Maybe it's 70,000, we recommend 3 times that to keep in the operating account. That's the cash cushion. I talk to a lot of people and they're like, Duckett, that's too much. I don't want to keep that much tied up in my business. Okay, to each his own. I get that. But what happens when time gets tough and things start drying up a bit? Okay, if you don't have enough cash in the business, you're going to have to inject some cash in the business or borrow on a line of credit and that sort of thing. Okay, we recommend 3 months of that cash expenditure. Okay, 3 months of the BAM, 3 months of typical overhead, if that makes sense. Okay, so for me, first thing you look on financial statements, balance sheet, cash, what is it? Are you good? Second thing, we're going to look at that cash flow statement because cash is queen and then the cash flow is king. And we'll hit that on the next video. So guys, go check out your cash balances. Make sure you got enough. Also make sure you guys got some in the tax account too outside that operating. So you're planning for that tax man from all that profit that you're making. So guys, go make it a great week. And remember, keep getting better. We'll talk soon.